If you're starting a business, you might be wondering, should you get a DBA or form an LLC? A lot of people confuse the two, but they're completely different. And so in this video, I'm going to break down the difference between a DBA and an LLC so that you know exactly what you need to get to set your business up for success. And so you might be wondering, what is a DBA? DBA stands for doing business as and is like a nickname for your business. And so if you're running a sole proprietorship or you haven't formed a legal entity with your state, then a DBA allows you to operate your business under a different name than your own personal name. And then we compare that with an LLC, or a limited liability company. And so an LLC is a legal entity that you form with the state. And because you form that entity with the state, you have limited liability protection. And so when you compare a DBA versus an LLC, there's 5 key differences that you need to know. The first key difference is legal protection. And so with a DBA, you have no limited liability protection, which means if your business were to get sued, you personally would be liable or responsible for paying off that lawsuit, which means that if you were to lose, your house, your car, or any other assets that you personally own could be at risk. And so there are no protections when you have a DBA. And now let's compare that with an LLC. And so if someone were to sue your business, let's say that they choked on a chicken bone, that person would not be able to come after your personal assets. They would only be able to come after the assets that are owned by that specific LLC. And so if you wind up owning multiple chicken shacks like Shaquille O'Neal, it would be wise to have them under separate LLCs so that one LLC is at risk if you were to get sued. Next, let's talk about ownership structure. And so when you run your business under a DBA, there is no legal entity. Technically, the IRS sees it as a sole proprietorship or a general partnership, but a DBA will help you run the business without including one of the owner's names. Then let's compare it to an LLC. And so with an LLC, you are a registered business entity with your state, which means that anybody can find your business in your state's public records. And generally speaking, your business name, your business address, and your registered agent is public information. And so considering this information is public, if you file an LLC, you want to think very carefully with how you fill out the paperwork. And then we have the costs and fees. And so typically a DBA costs a lot less than forming an LLC. To give you an example, in the state of Texas, it costs $25 to file a DBA, versus it costs at minimum $300 to file an LLC. And so that's a difference of $275. And I know from personal experience, when starting any business, you generally want to keep costs low, but you don't want to keep costs too low that you wind up making a poor decision that'll cost you a lot more money in the long run. Now let's think about taxes and filing. And so when you have a DBA, taxes will flow to the person's individual tax return or each partner's individual tax return. And so with the DBA, any income from the business flows to the individual owner. Now let's compare that to an LLC. By default, if it's a single member LLC, taxes will flow to the individual. But with an LLC, you have the option of electing to be taxed as an S corporation. And so if you are taxed as an S corp, you could save on taxes by paying less self-employment tax. But typically, you want to consult a lawyer or a tax professional when deciding to elect as an S corp. And then we have the last key difference, and that's with credibility. And so with a DBA, you are communicating a professional appearance to customers. But when it comes to banks and lending options, that's where it gets a little dicey. Because if you try to get funding, like a business loan or business credit cards, they're not going to take a DBA as seriously as they would an LLC, as it's not yet a legal business entity. And so you are reducing your chances of getting funding for your business. And that applies to business credit as well as grants, because most organizations and banks will require you to have a registered business with your state. And then let's compare it with an LLC. And so an LLC is exactly what banks and other lenders are looking for when they consider whether or not to give your business funding. They want to see that you've invested in your business. And the best way to invest in your business and show that you are serious about being in business for years to come is by having a legal entity in the form of an LLC. And so there you have it. These are the key differences between a DBA and an LLC. And so each one of us starts at a different point. And so if you're just getting started, you haven't made any sales yet, or you don't have a customer yet, you can start off as a sole proprietorship and then work your way to a DBA and then eventually an LLC. You don't have to have everything all at once, but the sooner you get everything together, the sooner more doors will open for you. Let me know if you have any questions in the comments below, and make sure to check out this video right here to get your LLC set up.